Time now for Options Corner. Joining us to take a deeper look at this chart, we've got Rick Ducat, lead market technician. All right, Rick, take us through what you notice about this chart for Alibaba.
A very sharp rally to the upside in recent weeks that we've seen here since mid-August. It's been pretty much straight up here. A very sharp outperformance here against the consumer discretionary sector and the S&P. And when we look at the e-commerce space here, we can see Baba is once again at the top of the pack here versus eBay and Amazon, and then Pinduoduo and JD. The big difference, these are all e-commerce companies, but these two are going to be probably adversely affected by some of these tariffs. Meanwhile, Baba's making AI chips. So a very big difference between some of the finer points of this particular company. So now we can see upward channel, very steep. The steeper something is, the less sustainable it is. But, there's no way to predict when that's going to end. So the best you can do is try to think about potential supportive areas. We could see the start of our gap level right here near about 182 or so. And then these old highs near 180, another gap near 172 and 167 or so. If we were to look at our moving averages, not too much to help here, but this 9-period exponential moving average is fairly close to the trend line here. We can also see that RSI, even though it has broken through its upward sloping trend line, we are mostly holding on. We didn't quite make a new relative highs there, but we are in the overbought area still, so a bit of a mixed signal question mark there. Overbought RSI is typically a sign of strength in a trending market here. Now we can see volume profile shows that there are small nodes here and here lining up with some of our areas we discussed earlier, around 163 and around 180 or so. Meanwhile, our standard deviation channels are +2 and +3. Could be some potential short-term boundaries here, 185.84 and about 208 as of yesterday's close. Finally, if we were to look at our expected move for the October 17th expiration here, 8.1% move in only 14 days here. This purple shaded area represents the possible range. So we can see that the low end lines up with quite a lot of the supportive areas we mentioned earlier. So around 175 to the upside. The upper range pretty close to our standard deviation channel. So look for possible resistance around 206, 207, 208, that general range.
All right, thank you, Rick. That's the Duke of Data himself, Rick Ducat. Now take us through an example trade. We've got Tom White, senior options contributor and co-host of Fast Market. All right, Tom, what's the approach you would take for an example trade for Alibaba?
Yeah, Rick's charts kind of paint the picture there that overbought on a technical basis. That doesn't mean it's going to go down by any stretch of the imagination. I think one of the key things is you look at parabolic moves like that. On a valuation basis, it's still a lot cheaper than the tech companies over here based in the U.S., but you're dealing with Chinese-based companies. So I looked at a strategy that, hey, maybe you missed this parabolic move. Maybe you're still bullish on the name. It got upgraded today. It's up 120% this year. That I can still take a bullish stance, but then not be aggressive about it. Be a little bit more passive in this type of strategy. Really short-term positioning on this example trade that we're going to look at today. This is going to be out in the October 17th monthly option, so they expire in 2 weeks. We're looking at a short put vertical that's neutral to bullish, but gives me a better probability of success. So going out to that October 17th monthly options, we're going to sell the 185 strike put. Stock's going to open up just above 190 right now, so you're out of the money to the downside. And then to make it risk defined, because anything can happen, it's not immune to market moves, we're going to buy the 175 strike put. So a short $10 wide neutral to bullish put vertical, we're going to collect roughly about a $3 credit. That's what you can make on this position. $300 per spread with about $700 in risk, but that's all the way below that 175 level that Rick talked about as being a key area of support. Now, if you collect that $3 credit, it takes your break even down to 182 to the downside. That's going to be about 4.5% below where Alibaba is going to open up here, just above 190 a share. And I think one of the key things is we talk about high probabilities of success. That short 185 strike put that you're selling in this strategy has about a 60% probability of finishing out of the money, which gives you those better odds of potential profitability on this one. Now, if you take a look at the risk reward, you're risking 700 to make only 300, but we talk about those trade-offs, and the probability of success is higher on this type of trade. And this is only for one of those trades where, hey, all it needs to do is consolidate, go higher, or it can you can actually be wrong. It can go lower. As long as it stays above 182, you can be profitable on this passive bullish trade, Diane.
All right, that's a good one there. A put vertical example trade there. Thank you, Tom.